Good afternoon, everyone. BC Richfield here, coming to you live from London. It has just gone midday UTC. Big shout out to everybody that's joining the stream live today, and for everybody that's watching it on catch up. How is everybody doing today? Fresh back from the London blockchain event, which was really, really cool. Had an amazing pleasure to meet two of our members there as well, the two competition winners, which was really, really cool. Had a great time, met some amazing people. And it was just a real joy of an event to behold, actually. Burb had an amazing speech up there. It really was quality, and it was really fun to be around some of the other traders and that as well. Yakuza, good morning, or good afternoon. And Kelly Barker again. Hey, how are you doing? Kelly, if I remember this rightly from one of the other streams, aren't you tuning in from New Zealand or somewhere? Like it's about crazy o'clock in the morning for you guys there, or I might have that wrong after a lot of traveling and catching up over the last couple of days. It might have addled my brain a bit, but welcome regardless. Fantastic to have you all here. So today, Wednesday, I appreciate I wasn't here for the stream on Monday because I was at the blockchain event. So I wanted to open this one up to you guys today if there was anything particular that you wanted to look at in terms of chart requests. If not, I'll probably make a bit of time over here. Yakuza, 1 p.m. in France. Lovely, beautiful country over there. Yeah, you guys are just an hour difference to us, aren't you? Actually, just an hour ahead. Lovely. South, north, or that part. So many lovely places there, and obviously all the valleys and that, and the wine districts, which are absolutely fantastic. Not to mention some of the lovely chateaus and that over there as well. Marta, Jay, Bern, Nipar. Hey, how are we all doing, guys? Fantastic to have you all on the stream. Just saying we're going to open this up as a bit of a chart request one today. I don't know if there's anything particular you guys want to look at. We'll fly into some clean charts, do some top down, see if we can find some nice setups. If not, share with you guys what we've been playing on Ethereum recently, why we've been playing it, and what kind of setups. In fact, let me just grab an ETH chart up and I'll share this with you guys now so that we can crack on, and then we can flip over as and when we need to any other asset classes that you guys want to look at. It could be FX, can be some legacy, or obviously crypto, altcoins, and bits and pieces like that as well. So what's been working really well? I mean, not just what's been working well, but my trading is very, very simple style, as you guys will obviously understand. I'm looking for key levels. I'm looking for reactions at those key levels. And more so than that, I kind of restrict my trading down to kill zone times, because these days, not so much, years ago when I was kind of cutting my teeth in the professional game, I used to trade all sessions, right? I used to be obsessed, sometimes even stay up and trade Asia and stuff like that until the early hours. But you have to get to a point sometimes where you're kind of containing yourself. Trading is one of those things that's quite addictive. It's that endless pursuit for excellence. But at the same time, when you kind of get to a point, you have other responsibilities. I do a lot of content work. Obviously, I work with our amazing community over at The Nest. It kind of really made me focus and kind of dial in back to what I studied years ago under like ICT, which was the kill zones, right? So making the most of those. And I kind of wanted to just touch upon this with you guys today, actually, in terms of, how that might be able to help your trading, or how it's certainly something that you could kind of look into. So Yakuza, always interested in ETH and VET. Awesome. Got an entry at 1598 yesterday. Okay. So you were in down here, my friend, weren't you? That is a really nice entry. Well done. Really nice long. We've got, obviously, you're going to have to forgive me here. These are my actual trading charts, so these are probably going to look a little bit messy. So yeah, let's have a look at this. Really interesting. So for me, just to kind of run it, very quick top down for you, how I'm kind of looking at this. The purple lines represent weekly levels on this setup, and they're the areas that I consider to kind of be the key liquidity targets, right? So if we break and hold above here, I think the chances are we're going to kind of try and seek out liquidity above this. Why we've got these highs here, also coming into this order block here, right? Which this would represent kind of around the equilibrium of the volume, right? This part here. I trade the bodies of the candles, not so interested in the wicks when I'm looking for that, as I do with order blocks as well, and the same with breakers. And that's just my personal preference that I've done for a lot of years, especially when I was studying FX. But we can see here how we're kind of, We've got the high, the low, lower high, lower low. We've stayed bearish through this. We've now got this lower low. We've just snuck over in the process of making a higher high, right? And it depends how you want to register these in terms of your candle setups. If you're just allowing one candle either side of the main candle. So this represents a swing high because it's flanked by two lower highs. And this represents a swing low because it's flanked by two higher lows, right? Now, especially on these scales, you want to see the flow move. And I want to see something a little bit punchier move above this level. What we can see really clearly and why this level is so important for me is because of how it's clearly capping the market, right? Resistance, 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 resistance. No closes above it, right? Look how clean that is, how much the bodies of these candles have respected that weekly level. Now, that's why I'm looking and I'm paying a lot of attention on the higher time frame for these key levels, right? But at the same time, appreciating that I'm executing on the low time frames, all right? So as I move this down to the daily, I need to know what it is I'm looking for. You know, if I'm bullish through here, right? So for an example, if I'm looking for a market structure break, I've got my low. Let me just zoom in and make sure to run through this nice and clear for you guys. So we've got our low here. We come up to set this high, higher low. So what you'll tend to find, not always, but it's a good thing to study, is when you get this move through, this energetic move through, what I will say is kind of punching the move through. C-Ron, my man, he was making the tea. What a boy. So just quickly, C-Ron was one of our members, one of the competition winners who I had the unbelievable pleasure of meeting in London. We had a fantastic time. And yeah, it was a really, really cool event. I'm not going to digress on it too much. Could talk about it for ages, obviously, but it was a real pleasure to meet you, bud. And hopefully I get the pleasure in the future to meet a lot more of you as well. I'm a really accessible guy. I'll let you know when I'm at events and bits and pieces. If we get the opportunity to meet up, then it would be fantastic. So when we're looking for these moves, you'll hear me quite often talk about the energy or the displacement or the dynamism of a candle. Now, this to me, this energetic move higher tells me that that's the initial stage of that punch, that movement higher, that there's acceptance, that there's buyers stepping in, right? So then we're simply looking for this level to be retested. Yeah. And then from there, obviously we get this progression. Now, this is on a daily scale. If I was showing you this chart on a 15-minute with a clear liquidity target up here, yeah, via, I would say, probably the origin of this breakdown, we've got this big up move here as price sells off. So you'd be aware of that there, right? I'd also be aware of this breaker. You know, this is the last down candle before we swept this high and then price really sold off. So let's just say, for example, we're being conservative, which it often pays in trading to do. And we'll do this as a dotted line and say that this is our target line. This is our breaker here. So from here to here, we're bullish. Yeah, we'd be wary of these highs here as a kind of initial target. So let's draw those in as well in a slightly thinner. Well, no, we'll just keep it as that. And we'll say first target, second target. Now, when we are bullish on a daily scale, we want to see price open, draw down to come back into a discount. Yeah. So give us an opportunity to buy lower before it then expands higher. And I want to show you what that looks like with these candles, right? You want to see the day open, trade down that little wick and expand higher. The day opens, trades down, expands higher, right? Opens down higher, opens down higher, opens down higher, right? So let's just take this little sample of data for a moment, because this is very much going to plug into what I'm looking to share with you guys today, and something that's been very, very important in my trading for a long, long time. Let's just do it here so we're not ripping through too much. Now, you remember what I said, right? So what I'm going to do is I'm now going to put the session breaks on, which you can do just down here for anybody that doesn't know. You just got this little sun symbol. Yeah, click on that, session breaks. And then when you drop to the lower time frames, I'll show you this first of all on an hourly. See these light grey lines? Hopefully they're clear for you guys. Do let me know if they're not. These light grey lines represent our day. Yeah. So let's remember what we just said about the bias. Yeah. And let me just hide this for a second because it's getting distracting. I'm going to do the same here as well. Right. So here's our break of structure. This is the red line. We want to see this retested. Yeah. Now, what we want to see from each day, and we're going to do this on the lower time frames in a minute, so you can see it as well, is we get this retest. We want to see price. What do we say? We want to see price draw down. For me, I want to see it within inside my New York kill zone. Yeah. We want to see price move lower time frames. That's where we find our entries. Price expands higher. Our initial target is always clear and obvious. So if we're entering down here, we've got these obvious high here. Yeah, we can see the initial reaction off that is what drives price down. All right. Every day, we're just looking for that opportunity, right? Price comes in, draws lower, we don't get our break to the upside. Okay. So hopefully that's nice and if that's nice and easy for people to understand. Hopefully it will become a little bit clearer as we move down to an executable time frame. So I'm now down on the 5-minute chart, and you have to give it a few seconds. 1, so I can pour me tea, and 2, so that we can just give the data set a little bit of time to load, because we're asking TradingView to process quite a lot of data on this time frame. All right. So let's drag this back. So if I'm looking at my kill zones, right, which I've got here. So this is my AM session. This starts, as we can see on here. This runs through, and then this comes into our PM session. All right. So what are we looking for here? We want to go back inside our kill zones here. Actually, just here we go. Perfect. Just change this. I just really threw me off then that these timings were out, and I don't know why. TradingView keeps resetting my chart when I shut it down at night to one of these UTC -5 times, which is interesting. There we go. So these kill zones should align. This should be exactly 3:30 in the 1:30 in the afternoon, 13:30 UTC time. Okay. So what I'm looking for here is I'm looking for a sweep. Yeah, meaning that I see liquidity is taken. But bearing in mind, this is all just based off of a high time frame bias. Yeah. My high time frame is biased. I'm not going to fade that. Right. All I'm going to look is I just want to be looking for confirmations for my entry. Yeah. Now, my entry technique, I'm very, very open about it. Okay. I want to see a sweep. I'll do this in a thicker line so you guys can see this clearly. Yeah. So this shows me that liquidity is taken. Yeah. Then I want to see a shift in structure. So low, high, higher, low. We want to see this high broken above. Right. So this is our key high. Now, in this instance, I wouldn't be entering here, right? Even though it would be a decent entry, as we can see from what took off here, and you will miss moves like this, and I will miss moves. We all will. But it's about consistency. I want to see a move like this. Yeah. Like I said before, I want to see displacement, as ICT would call it. I want to see an energetic move. I want to see price tell me that it's getting ready to go. All right. So when we get this punch above, what we're looking for is we're first looking for a sweep, right? So we want to look for the up move, yeah, that led to the sweep of price lower. Now, in this case, right, we'd be looking for the up move back here because we haven't had a sweep. See how these lows, are just getting higher. So as we break structure above here, the opportunity we'd find ourselves to enter would be in here. For me, this is outside of my kill zone, all right? So again, we're just looking on, and then we're looking to move to our next day. We're looking for clear and obvious targets to the left. We want to see a sweep. We want to see an impulse move higher, and then we want to see price retrace to our target, right? So it's all as simple as that. But the whole principle of what we're looking for is we're waiting for these corrective moves on the day to allow us to get in, right? And it seems very, very counterintuitive, okay? So beginning of the day, you're waiting for that pullback. You're waiting for price to come back to give you a buying opportunity lower before you're then looking to trade it higher. I'm looking for the same when I'm operating within my kill zones, okay? So now I would normally enter this on a 3-minute chart, right? But the principle here is the same. And I'll show you one in real time. We look for our sweep. We notice this happens in the AM session of New York, yeah? Here's the sweep, right? Now, I'm bullish, so I want to know where the bullish breaker is. Where's the up move that drove price down, yeah? So it's here. And quite simply, that's my entry. Can you guys see that clearly on there? Let me just make that a bit more prominent. Okay, now you can have different entry techniques as well. You could play the breaker line, which is actually happens to be the same line on here, but the principle remains the same. Bullish high time frame bias. I want to see price drawing down into my kill zone, sweeping, yeah, meaning taking liquidity from a local low, this one. Then I want to see an impulse move higher. Notice how different this move is, how this punches higher. It tells us it's ready to go, okay? And then all I'm doing is when we get that move higher, I'm then opening a limit order on here. So it would look something like this as price comes back down. Our limit order would be on this line. We would tag ourselves in here. We've got a clear low here, which we would just go a few pips below, right? And then we're looking left for our clear and obvious target, which are these highs, right? That's where we expect liquidity to be swept from. Yes, we would have extended targets up here, but at the point we get to this target, we've got an almost 3R trade. I'm trimming quite a heavy amount of profit there, putting my stop loss to entry, and then leaving that in there in case it runs. But if it doesn't run, then no problem, all right? You won't always get your entry. You can see the situation here. Here's our sweep. This is where price busts out and breaks above, yeah? And then actually, oh no, we're a little bit away, right? That's the up move that led to the sweep lower. And we can see if I just hover there, we don't quite come back for it. The other thing you want to see realistically for high probability setups, right, is in this initial move up, yeah, this one here that breaks structure, you want to see some kind of inefficiency, right? So like a fair value gap. This one gives us a really good example. We see the break of structure, price rises up. Here's our breaker block, yeah? We draw that across to there through a fair value gap. You've got a double point of confirmation then in terms of looking for that to shift. Does that make sense, guys? So the idea and the principle is always the same. When we're bullish, seems counterintuitive. We're waiting for price to correct, yeah? And then we're waiting for it to expand. And we just trade each day the same. So we're seeing we're coming here, coming here, coming here. Here's our move down within our kill zone, right? This is the move down we're looking to get on board with, and then we're trading it higher, right? Exactly the same as we've got here. We're waiting for price to come down. We're looking for a sweep, which we get here, sweep this low. We then want a structure break. We would wait for this impulsive move higher because there's no real clearer structure break than that with an impulse move. Then you want to see price trace back down, yeah? And then we're looking across here and saying, okay, well, where was the key breaker block in here? If this is our sweep. So there's our sweep. We then want to know, well, okay, where's the last up move here before that sweep? I'm looking in here for this. Entry stops below here, right? You could be aggressive and put your stop below there, but if I've got one in close proximity, in case you get a deeper corrective move down, especially on crypto, then I'm looking to pop my stops on there. And then once again, you're just looking left here for your initial target, which would be here. So impulse move higher. At that point, when price takes off here, this is when we enter our limit order. This is what tags it. Stops go just a couple of pips under that low. Our initial target is running of this high. Nice three, but almost a 4R trade. And then obviously we have our extended targets to the upside here, which this would have been massive, right? This isn't to promote that you're going to be pulling off these crazy, 10, 15-hour trades. It's not really what this is about. Sometimes you'll get these kind of are your, they're the cherry on top of the cake, really. What you're looking for is good, solid 2-3R moves in this space, because we are talking sometimes with small percentages, right? So if I take my dear friend and just exceptionally good trader who is Razun, absolutely unbelievable guy. He makes this amazing indicator here called Position Size Manager. Now, we put the first one on our entry, next one on our stop loss, next one goes on our extended target, right? Or you could put it down onto this one, whatever you're doing. But you see this black box down here? This is what gives us all the information. It's based on a very, very conservative account size of $1,000 and only using 2%. So your risk per trade is always $20. And it fits these to let you know what it is. So your position size is 3,356. The margin is 335, which is 10% of that because it's based around 10x leverage. However, you can just change that in here: leverage, risk percentage, etc. I don't ever recommend trading with more than 2% of your account size. If anything, one actually statistically is proven to be the safest, and especially while you're learning, don't use big amounts of money if you are going to do this live. But I know this is a ridiculous example. In fact, let me just bring this down to our target one, because I don't really like promoting things like this as if I'm trying to say everyone can just jump on and just get 15-hour trades. Right, here we are. Position size is the same. We need to remember our fees are based on our position size, right? So I make a borderline, if I'm doing what I would call in the UK a back of a fag packet calculation, meaning that it's pretty rough, I allow 0.15% for fees. That allows me for my funding rate, what it is for my particular asset leverage, and then obviously my open close fees based on the limit order, and then a market execution on the worst case for the exit. Okay, remembering that you're getting charged more for market orders, because you're a taker, not a maker. Now, in here, we can see quite clearly margin, position size. Position size is what you care about. Your 0.15% goes on to this, right? So if you take your calculator out and you say to yourself, right, obviously you can do it mentally as well, but I would always recommend using a calculator just to be extra sure. And just to kind of highlight it, you're just taking the position, that's 3356.34 times 0. Say it really easy. I messed that up straight away. 3356.34 times 0.15% gives us $5.03 in fees. So our risk here isn't just $20, it's $25. But the more you take that down onto lower percentages, the higher the fee goes. So that's where you need to make sure, right, that you've got that covered, because otherwise your wins will get gobbled up with fees and your losers still have the same fees on them, right? So don't forget that. When you lose a trade, you're still paying your fees, all right? So hope that is helpful. I believe Resume plans to release that indicator soon. It's available for Nest members as well, so do go and check that out. A couple of questions. Bernd, my man, the Birdnest BC. How many candles do you use between highs and lows? For example, if you would put a zigzag on your chart, do you use 5 or 9 or 10 candles? Interesting. So for me, I hope I understand this right, mate. Please do correct me if I'm wrong. Let me delete that. So for me, a swing high and a swing low is just simply defined by the candles, 3 candle pattern, right? So let's just take this section here. And again, it depends on what you want to use it for. For me, I'm much more looking at how price is moving through a level if I'm looking to establish bias or trend, and also executions as well. But let me just get my highlighter and show you on here, right? So, and it's all going to be just in one color, unfortunately, but hopefully it makes sense. Right, so low, no key high in here. I don't think that one overtakes that one, so it would be that one, that one, that one. And some of these look really micro, right? But for me, they're still significant. And I'll tell you what the methodology is in here. Okay, so this is obviously a very low time frame chart, right? Now, what you're talking about here is if you're looking at this as a zigzag, right? Let me just... should be that one, because that never reaches a high. That one, that one, that one, that one, right? So, I personally, if you make that a better color, what will stand out a bit more? That stand out more? Okay, so high, low, higher high, higher low, lower high, lower low, lower high, higher low, equal highs, higher low, break of these. Yeah, if we draw our line across, gives us a nice confirmation of structure as we hold this in here. We set the higher high, higher low. Yeah, we've broken out from here. We continue in this structure upwards. So for me, I'm making an allowance for your indicator settings to show market structure, change of structure, and break of structure. Okay, really interesting. So I don't really work it in number of candles, right? I'm looking much more at the micro movements that exist within here. I know there's certain people that teach different strategies that will say you need to see in terms of the proximity of the higher highs and the higher lows. But I'm looking for what I would consider clear and obvious breaks. Yeah, so we can see in here that this is just getting a bit messy, right? So we've got our low, lower high, lower low. Yeah. So we're coming down onto here. Now, we don't get a clear break below this though, right? You see, we come down into this low. Actually, we then set this low here, which I missed. But there's no real clear break below this, right? Price kind of consolidates in here, and then we see this impulse move higher. Yeah, that sets our high, our low. You could even allow for a break of this high here, which often gets retested as a breaker line later, like this happens here. And then the structure kind of takes off. Now, if you're using it in terms of a number of candles, unfortunately, mate, that's not something that I have ever done before. But I do know the indicator that you're talking of, I think, by Nephew Sam. I don't actually use it, but I do train students that do use it. So when you're looking on here, it's these settings in here that you're looking to use, isn't it? I believe he's still active on Twitter as well, mate. So I think it might be interesting to kind of reach out to him and say what settings he would recommend for that, because I think it's going to be very specific to the type of indicator, how effective it is. So I'm really sorry I couldn't help you more on that one, buddy. But for me, that's how I, on any time frame, look to utilize market structure, and then I'm taking that on a higher time frame and then kind of decanting that down. Vikos, BC, do you usually execute in New York AM? Yeah, so not always. There is a tendency for the AM session, because as New York opens, that's normally when the positioning happens. If there's going to be a strong move, especially if we've run Asia or London, then that's when you can get it. But I'm also, if I see the setup in the PM, I kind of treat them as two different sessions, really. And I'll give you an example here. If it works out, maybe it doesn't. But we have our corrective move here, low, so high, lower low, lower high, lower low, right? So we're in a bearish structure here, low time frame bearish structure. We get our sweep, yeah, which is what we're looking for. But then we want to see a significant market structure break, right? So a clean high. I'm not interested in these micro highs. I want the market to tell me when it's ready to move. So this is our structure break. It's our market structure shift, our market structure break in this instance. But this is what I'm looking for, right? Had our sweep. We've come up, lower, a higher low. This is the impulse move, right? We see this, that impulse move higher. So then I'm saying to myself, okay, before we get that impulse move, do we have a sweep, which we do? Yeah. Where's the up candle that leads to that sweep? Is here. That's our breaker. That's our entry in there with our stops below here, right? So if I'm in at the AM session, yeah, and say I've got a clear and obvious target to the left, I would still be in that trade here, because I'd be monitoring these, right? We've already hit that, come back, retrace our entry. So then we're looking for the clear and obvious targets above here via this order block as well, which is capping price here. But then we don't have reason to get out of it when we do get there, because we get this huge impulse move higher. So as long as the risk to reward in this stretch here, and let's say we're targeting this high, as long as I've got a good enough risk to reward, which I will have here comfortably, right, stops below this swing low, a couple of pips, and then we're saying, okay, we want to see price run into these highs. I've got a 4R, I've got plenty of room for this trade to move. I would compound and add to my morning position is what I'd do, just to add that in there. Burned, awesome. I hope that's been helpful, mate. Yeah, I'm really sorry I couldn't help more with that. It's just not how I trade the candle patterns. So to answer you, Vikos, is that I'm treating the AM and PM sessions typically differently, and I'm monitoring what I see in the AM session. If I don't get that move, then I'm looking for the same thing in the PM session. If I get the move in the AM and I've got high conviction we're still going to target, which I do because it's in line with my high time frame bias, then I'm looking to trade it up to that at all times, and I'm happy to enter in both sessions. So I hope that helps, mate. Sorry, I appreciate I've missed a couple of questions from before. Let me just pop back to that. I think there was one from Yakuza as well. Yes, if I understand correctly, a possible entry today for a long could be 1635. NFA, good caveat. Brilliant. Well, okay, you get the point on this, right, guys? Wait for the days. Let me just run through it very quickly again, and then let's take a look at a potentially live trade opportunity. As we've said here, right, we're coming up. We've got our structure break here. There's our high, higher low, break of this high. We're bullish. Here was our initial target. We've traded into that. We've then had, again, look, an impulse move higher. Yeah. This punchy move, this energetic move higher. That doesn't want to come back. You don't want to be shorting candles like these high volume, these high body volume candles. Comes back in, pretty much retests this level, takes off, comes up to our secondary target. So from there, this is when we want to show a bit of caution because we don't know if price is going to hold this level. We don't know if it's going to reject here. That's why we kind of go in and make sure that we've got a buyer, we've got a high time frame bias, but we're also willing to play it both ways when it reaches those high time frame targets. So I hope that's been clear, guys. Happy to go over it again if anyone's got any questions. I believe I might have done a Bird Nest video on it too. But if there's anything you've got questions on, guys, don't ever hesitate to reach out to me at the Nest. That's part of the reason the trading team are there. We've all been here. We've all been through this. We want to give back to communities of people and help them kind of, maybe not make the same mistakes we did, but certainly have the ability to learn from them. So before we go on, I'll just have a look back. Heidi, which indicator is that shows AM, PM and lunch? Looks pretty. Yeah, I'm with you 100%. It is gorgeous, isn't it? I have no affiliation with the gentleman at all, but he seems like a really nice guy and he makes a really sick indicator. It's a guy called Dr. Fuse. This is how you spell it up here, guys. DOKTERFUSE. All right, and it also allows you to put this really cool little box at the top. Tells you the type asset you're trading, your handle, what this is on here because we're on the daily, yeah. But that would be minutes if it wasn't. And then date, and you can even change this to say your name at the top, which is really cool for the charts as well. All right. So it's Index Sessions by Dr. Fuse. He's got Twitter. Reach out to him on Twitter. And I believe it's a paid indicator, but he does this and a couple of others in a bundle really, really cheap. It's like, a couple of tens of dollars or something like that. If not, as well, just to be fair to everyone, I really like this guy's as well. Tradinator. This kind of puts it, you need to move down onto the minute time frame to see them so it doesn't clog the chart up. But this gives you these. You can turn these different sessions off: Asia, London, New York close, London lunch. You can kind of climb into here, choose what the sessions are, which with the Dr. Fuse ones you can't, but it's very, very accurate. And then you can pop these into here. Oh, hang on, because I've gone on to the same. Oh, you can with Dr. Fuse. So he has added that now, which is really, really cool, actually. So they were set before, but for me, actually, I think he gets them spot on anyway. But sorry, on ICT kill zones, you can't change them, that's right. But then you can turn the different session times off, Asia, London, etc. And that one's completely for free. That's ICT kill zones by someone called the Tradinator, TRADINATOR. And he's available also on Twitter. Seems like a really good guy, trades ICT concepts. And he's got a Terminator logo, as you can imagine, which goes really well with that. So I hope that's helped Heidi. Let me just take a look very quickly, and then we're going to go into this live trade example. Nitpar, my friend. Thanks, mate. You trade the New York Open. Do you think there are certain days better to trade than others? Typically, I'm not saying it's a good day to trade on. Typically, I wait for Monday to develop. I very rarely trade a Monday unless I've got good conviction heading in. I come from a little bit more of a traditional market background, and normally Mondays kind of set the tone for the week. So let me give you an example of that. Monday's range is normally a really, really key thing to play. Actually, you can do there we go, parallel channel. Let me just for ease, right? So this is Monday, right? This is Monday's high. And that's Monday's low, yeah? So this is Monday's range. Look how key it's already been, yeah? So what happened? Price came down, swept Monday's low of the range, came back inside, traded up via the midline to the range high. Now we're at the range high. There's a big question of, do we get a little move higher to sweep, yeah? Do we then break down? If we break down with energy and we get that structure, what do? We look for our breaker candle, and we look for price to come back into it before we trade it lower via the mid-range, all right? We would only trade this, I believe, on a half position size because we're countering the trend, all right? Okay, so using TD Sequential. Yeah, TD Sequential is also really nice as well. I used to trade under a guy called Tone Vase, who's a really, really top guy as well, old, very traditional trader. Many years ago. I learned a lot from that guy, and he has a system very similar called the MRI that I still use from time to time, which is about the 9-candle trend pattern and looking for trend reversals and exhaustions based on that. So before I digress, hopefully that gives a little bit of indication on that side of things, what I'm looking, and especially on a Monday. But I think we had a really good question up here from Yakuza. So if I understand you correctly, a possible entry today for long could be 1635. Well, let's absolutely smash into that and take a look, right? So look where we are on the daily, right? We're always very super important that we're checking our bias. Okay, so this is really, really choppy at the moment, right? We've got two clear levels capping the market. We've got this down here, and we've got obviously our weekly level up here. A little bit concerned about price running into that at the moment. You could say, for example, here that this is your low. There's your higher high. This is your higher low. Tricky one on a daily basis. This is a consolidation after a run. There's nothing majorly clear in here. Yeah, of course, there's structure breaks and that, but again, it depends if you're looking for the dynamic of how price is moving as well, right? Because if you're taking this on your basic structure of, look, this is a clear high, low, higher high, higher low, break of this level, yeah, would get you bullish. But for me, I want to see conviction. There's no conviction in that break above. Look at all the wicks, wick, wick, wick. Then it sells off, right? This punch below, however, high, higher, low, right? Lower high, lower low. So when we come below this level, yeah, this is when we're looking to be bearish into this range low. Why this range low? Because we expect there to be liquidity below it, and also below 1, 2, 3 key lows down here. That's the assumption of where price is going to search out liquidity. This red line was a similar principle when we broke above. Expected there to be some kind of reaction here. Broke down, low, lower high, break of this low here gives you a trading opportunity into the mid-range, all right? So that's where we are on the daily. So at the moment, the daily is just underneath resistance and is underneath the range resistance as well. So very tricky taking a long here. But we want to be looking here for potential breakdowns lower. And if price is going to come down and price is going to look for liquidity, it's going to look for it underneath this low here and then these lows down here, all right? But we would also be conscious of this, right? So that's our daily breaker down here. This is the up move that led to the sweep of this low that then led to that nice impulse move higher. So this could be a liquidity area here. It also comes over these down candles here, which is the order block before price broke market structure. All right. We've come down and filled this fair value gap. Yeah. So this is what was drawing price lower. But quite often we're looking for this bullish fair value gap to draw price lower before a bullish reaction to the upside. So again, there's a little bit of kind of lack of clarity if you want, right? Heidi, you're more than welcome, bud. More than welcome. So I'm going to then drop down to a 4-hour time frame, right? Sip of tea. Perfect. So let's take a look at this. Where are we? Now, again, the issue that I've got here is that we're slamming into this resistance, right? Really, what I would want to see is these highs attacked. But for that, we do need to reclaim this again, right? So I'd want to see price come up, do something like this. Again, an impulse move higher, but not taking out these highs. That's the key thing, right? I want to see those left untapped, because then what we want to see is when we had that structure break, yeah, where was that dip lower? Yeah, where can we target when price comes back into here to then let price attack the liquidity above these highs? And that's where we'd be looking to get out of the trade. But for me, I'd want to see this hold up here. I'd want to see a big move above this. And in truth, probably price even have acceptance above here if you want to be super safe. Yeah. So there can always be a risk that you're caught in, obviously, a liquidity move, right? Sweeping the highs before it goes down. So if you wanted to be certain of that, I think what you'd be looking for is something like this. Yeah, for price to come down and give you a retest. Then on the lower time frames, you wait for that structure to build, and then you're trading it into those highs. All right. It depends if you're willing to take those earlier kind of entries, but for now, I'm a little bit concerned about this level. But based on market structure, right, we can see here that price is in a downtrend right here. Lower highs, lower lows, lower highs, lower lows. However, comes into this order block here, see these down candles, and gets a pretty positive reaction to the upside. We get our high, we get our higher low, right? Then a lower high, lower low, yeah? Now a lower high again. It's just a little bit messy and indecisive, right? So to build a bias at the moment for me is actually pretty tricky on this. I'd want to be getting in lower down here, or this for me would be for shorting rather than for longing, yeah? We've come up, we've taken this liquidity out here. So we've swept this. If we now go back down onto a more executable time frame, we can just see price really struggling with this, right? The range high. We've come up, and this is why I said, remember, when we're looking for confirmation, if you get too excited and you try and play this out here, there's a chance this is just a liquidity sweep. So what you would want to see, or what I like to see, is this move here, yeah? I then want to see price come back down into this level on a low time frame like this and find acceptance. Build a platform to move off of, yeah? And then you wait for that sweep lower, taking out that liquidity, then an impulse move higher, and then we're just looking for our breaker candle in there, or you can enter on this line, or you can trade it back down to a fair value gap that exists in there. There's a lot of different entry techniques you can have, but playing these initial breakouts can be quite dangerous, right? So if we had more conviction over our bearish bias, yeah, so let's say, for example, we were coming down from more of a downtrend and we're saying to ourselves, look, we've got more conviction that this thing is going bearish, then what I'm looking for right here is that sweep, right? The high has now been taken. We want to see a market structure shift, which would be here. And that's because we've got a higher high and we're only breaking that low. It's a shift, not necessarily a break, right? Market structure break technically would be when you're getting, your high, higher low, and then the break of that high. The shift is when we haven't moved bearish yet. We've just got the high. We're then looking to set a lower low, right? So that would look like, the potential trade setup would look like this, right? We want to see price really tell us that it's getting ready to move. Yeah? That's what's saying to us, okay, price is now ready to make its way down. We then need to know where the down candles were, yeah, that led to this impulse move higher. Now, I would treat this really as one kind of move up. So I'm looking for these down candles in here. So we can see we've got these two combined candles here. So we would want to see this move down here, this strong move, right? Take out these lows, price punches lower, and then we would simply look to enter on a retest of this with our stops above here. All right. So to just show a bit neater what that might look like. Oh. This would be our short position. We can see here, remember, we need to see this move lower. We need to see it really punch. We need to see that displacement, right? And then and only then, when we see that, a couple of pips above here, where are our clear and obvious targets? Because there's such a big drop here, I would probably be looking at this consolidation, this small down move before a move higher, which would make a good early target. I'll be conservative and put it on the top of that move. But then realistically, we can see how thin this move up is, right? Now, obviously, we would trim a lot of profit and stuff, but realistically, if you're playing that back down to what we would consider the clean liquidity below these relative equal lows, that's what that looks like. All right, so that would be my kind of thoughts on that one. All right, but I hope that's been clear. I've not been too kind of waffly with that. But like I said, the real key thing here, this is a dangerous trade because you're kind of trading against the trend. So you'd either have to go in with half an allocation, and you really would want to see this strong move down to here, then for price to come back into this, and then you're looking to trade it lower. All right, but being aware that this is a counter trend trade to the high time frame, we've got it quite choppy. So something I would also be looking at would be ES, which is our S&P 500 mini contracts. And I'm saying to myself, okay, well, this doesn't look overly bullish at the moment, right? We're in a clear downtrend here. We lost this liquidity level, which we retested. We just pop the session breaks off for a second. We filled this fair value gap now, so there's no, well, actually, you can see these as support and resistance flips. It's not something that I use that often, so not something I really want to project, but there is some good information out there on that, especially, obviously, ICT. Yakuza, you're very welcome, mate, very welcome. So we've come down, take out those key lows, right? If we're then starting to break down again, chances are we're coming for a key level like this one here, or the liquidity resting below here. If the ES is heavy, normally risk is pretty heavy with it as well, so we turn our attention to the DXY. This isn't always correlated, right? But again, like I'm saying, my concern shorting this here is if the DXY is heavy, as in it's coming down, then that normally means that risk has got room to move higher. All right. So if you haven't got a really clear read, I would always recommend staying sidelined. But for now, this red level that we've got here is going to be key. We can see what key interactions we've had with it before: support, 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 deviation, comes back above, has a big impulse move, first of all there, and then off the retest. Lose this level, sells off low, resistance, resistance, breaks above, comes below, you've got your over, under, impulse move high. See how important it is to wait for these moves higher and then for levels to be held? Yeah, big move higher, retest, price now moves up. For my money, this is where we're coming back down to at the moment, and it's just if we can get enough momentum on risk going higher, right, that we would want to see. If we were looking at this on a slightly higher time frame, again, we can see now on ETH how key this level is, this black line, and how dangerous it could be to short this because we're showing strength at the moment, and our counter-correlated asset in the DXY is showing weakness. So for me, this is a dangerous place to short, right? But just in terms of technique and what I'd be looking at, that's what I'd be going for. But again, can you see how we're not... Let me just get rid of these. Can you see how we're not getting that close below? We've not got that punch lower. We've not got that energy at the moment. If we really get it down to here and we start taking out structure, I would consider it. But in truth, it's a bit treacherous with the fact that we've got ES weak is giving us confidence that we could see risk correct. But the fact that we've got the DXY strong, and I know the correlation between these asset classes shifts, all right, guys, the same way as it does with the 2s and 10s on the bonds and the yields. But yeah, I'm pretty flat at the moment, to be honest. In terms of my triggers and my setup, this presents a lovely short. This presents potential short triggers and setups. But again, once we know our levels, look, that long downside wick and the fact that we've closed this as a pin bar, right? Look at that. Big hammer candle, pin bar, is telling us that there's still buying pressure coming into here, right? So for me, it's looking at it being just a little bit flat. So I really do hope that's helped, guys. If anyone's got any other questions on that, please do let me know. Leanne, hey, bud. Well, better late than never. Always lovely to have you on the stream. Hope you're doing well. Twitter was down. Oh, no. I should check that, really, actually, before I put the post out. I'm sorry as well, because my reminder came out really late today, and obviously I don't know if anyone expected me to be on because of coming back from the event. But yeah, it's lovely to have you on here as always, bud. So we're just looking at different assets, just going across, looking at the moment how there's a little bit of lack of clarity as it stands because we've got a push on, we've got DXY coming down along with ES, so the kind of not really getting a clean read on this, and we're at a higher time frame resistance level on ETH, which I imagine probably not too dissimilar. We'll have a quick look at Bitcoin. Obviously, as we all know, or maybe some don't, but this is going to really set the tone for the crypto space. You get some assets, some outliers that will run while Bitcoin's correcting, but very often you're going to look at assets to follow. What you want to watch for is when Bitcoin is correcting. So actually, we did a very kind of like mini workshop, Dank and I, who hooked up again at the thing, which was awesome. Just such a top lad. We'll be doing a joint stream soon. He's going to come on with me. I'm going to go on with him. So I'll let you guys know when that's going to be about. We're going to do like a little scalping session together. But for me, I was kind of looking at these areas here and saying like, okay, well, what's capping us? What's stopping price here? For me, it was this kind of consolidation here. Not really sure what time frame I was taking this off of. Maybe a 15, maybe slightly higher. But this in here, there'll be a breaker in here, the down candle led to the move up from the breakdown, or it's an order block. But it's a key point that's obviously rejecting price. So with something like Bitcoin, actually, this reads a little bit clearer. We need to obviously be aware of this level here. But when we're looking at this area, we can see how it's kind of holding price, right? Price is holding, punch below, retest, big sell-off. So now we expect sellers to be there again. Lo and behold, we come into this area here. And again, look, within our kill zone. So on a low time frame, sweep, breakdown, trade to obvious lows. And it's still acting as resistance now. So what does that tell us? It tells us, oh, you're welcome, Leanne. Anytime, buddy, anytime. It tells me that if we can break above this, come back down and start to hold this here, on a lower time frame, I can trade it into here, right? Using that, there's our sweep, break above, retest into the breaker there. And then we're looking for our obvious target. So we've got this one here, and then above that, we would obviously have these clean highs over there. And as long as we've got enough room to move, obviously this would be on a lower time frame. This helps give us a little bit of extra confluence, right? Because what you'll typically get is you'll get a lot of people FOMOing into this if it starts to run and take out this. You then often, the reason we get those retests is it's normally to generate more liquidity, to take out people's stops that had entered in late before it then pops a little bit higher. So that's what I'd be looking for on Bitcoin. I think then we're just saying to ourselves, okay, well, what's obviously capping the market to the downside? When we were scalping this the other day, just in terms of principles, we were doing this on a very low time frame. But that's your low time frame order block. Same principles here. That was capping the market. Yeah. Order block, price sells off, retest, it sells off, comes up here. Look at all these upside wicks. Then when we get in here and we start to break down again, you've got a nice invalidation point. You then come back down. We were looking for this level to hold here. Why? Because this was the down move before price moved up that also acted as support here. Now, when we ripped through this, right, for me, this would look to be a little bit invalidated now. And I'd be saying to myself, okay, well, where's the obvious move in here? And then I would say in here, we're looking at the down candle that then leads to this move higher. I'd be making an allowance for these. But then I'd also be thinking, well, we've got a bit of a sweep here as well, right? And if we've got that sweep, and we're looking for price to go up, we want to know where the up move is before the move down. So your breakers in here as well. To be conservative, you can just take this block. And then I'd be saying, if we're going to break down here, so if we're showing weakness, especially if we popped above here to take any of the liquidity resting here, and then if we were to come back down and take out these lows, so something like this, impulse move lower, come back into this level here, then I'd see that as weakness, right? Yeah, you could be getting flushed out, but look, we've already swept those, right? So if price was going to pop from here, you'd be expecting some movement. So in here, you can either wait, see a retest, wait for that breakdown, enter lower with more confirmation and your stops above here, right? Or you can take the aggressive entry, which is in here, stops above the high that's created here, and then you just got a nice clean target to the downside, all right? Alex Shiva, that is an awesome graphic, mate. That's Scarface, unless I am mistaken. Waiting for equities. Yeah, exactly. So, yeah, good way to do it. Again, guys, always test this stuff. Don't listen to me or anybody else without kind of getting your own validation on it, right? And that's not you. I'm talking about Alex. Sorry, mate. Just anyone in terms of influencers or anyone you hear. But Alex has a really good point, one that kind of speaks quite highly to me as well, which is, you know, watching equities. And by equities is meaning things like ES, which is our S&P 500. This is just the mini contract version. And then we've got the NASDAQ as well. NASDAQ can be a very good one as well because it's heavily weighted towards technology stocks and bits and pieces, which often have a stronger correlation to Bitcoin and altcoins as well. So I know we didn't really have any alt requests today on that, guys. We can make a little bit of time for that on Monday if anybody's got anything of any particular interest. We're just kind of coming up to the hour mark. Unless anybody has anything specific they'd like me to look at for the last 5 minutes, I'll give you a little minute to answer that one. And if not, then we'll close up for the day and get ourselves underway. But I will say as well, guys, I think in the description of this, there should be the free trial to the Nest, which you can come and join for free for 7 days. See if you like it, if you're interested in the education side of it, working alongside a professional trading team and kind of looking at how that works. Also gives you access to that community, into the trades if you've got questions, and it gives you a breadth of of different trading styles that you can tap into, right? So you're looking at algorithmic traders, you're looking at low time frame day traders like myself, swings traders, position traders, and bits and pieces of that as well. You're more than welcome, Alex. You are very welcome, my friend, and that's very lovely of you to say. Yeah, look, I'm not saying the nest is for everyone. For me, what made me join this is because of the collective mind of the people. Burb was a huge lure. We're people that we're doing this for the want of giving back to a community, right? We're not doing this to get paid. We're professional traders. We've all earned our living from the markets for a number of years, minimum a number of years, right? So this is more about harboring and equipping people. So our mission, our statement of the nest is that we want to help equip people with the skills and techniques necessary to achieve their own financial freedom. We're a group of people that have all come from non-financial backgrounds to get to where we are, so we know what it is to kind of go through those struggles, and hopefully that's something that helps. On the flip side, you can also join for free and get access to our calls only through the Bybit link. Okay, you can see the link at the bottom of the screen there, and it's in the description as well. All you're doing for this, guys, is there's I think a minimum of $100 deposit or something, and for that you get X amount of access to the calls every month, which you can top up by just continuing to trade on there. And yeah, it's just a good way. You get access to all the team's calls. I like to think that people, it's something they can use where they can earn some money whilst they're learning to trade. All right. That for me is a big thing. You want to achieve your own freedom. You don't want to be reliant on other people, right? But I appreciate in these times, which are particularly tough, having that ability to make an income off of, copy trading professional traders is a shrewd thing to do. Just don't get too caught up in that. Make sure you're developing yourself, right? You don't want to do that. You want to, while that's earning you a bit of money on the side, you want to make sure that you're pushing your education out there as well. All right, guys. So what a fantastic stream. What a bunch of legends. I really do appreciate all of you guys. I really do. Taking your time to come on and listen to me ramble about the charts. I hope there's been something interesting there for you guys. But a huge, huge thank you. Yakuza, time to get back to work. Have a great day at work, guys. Nitpar, what a legend. Really can't wait to have you on board, buddy. And everybody else as well. Bernd, thank you very much. C. Ron, my man, great to meet you in person at the London event. I hope to meet a lot more of you in that as well. Vikos, who was on the stream as well. Obviously, Alex as well. Thank you, buddy. Leanne, who snuck in towards the end. What a legend. Heidi, Bernd, obviously. What a dude. Always on the streams as well. And let me just see. I don't want to miss anyone. Let me just cycle back to the Jay. Hey, buddy, I'm really, really sorry. I missed that on the thing. Hey, welcome. Thank you so much for coming on the stream. Marta, lovely to have you here. Kelly, there she is. It is 1 a.m. over there. You absolute legend in New Zealand. I plan to get out there in the next few years, and I'll definitely let you know when I do. Who else do we have? No, I think that's about it, guys. A load of people on the stream today. Some fantastic questions asked, as we always do. I hope it's been useful for you guys. Don't hesitate to reach out to me. And yeah, Bernd said as well, daily reports. One member of the team takes a day every week. We put out the daily reports, just giving you our idea on positions on equities and what the market's doing and what Bitcoin's doing as well. All right. So guys, once again, just thank you so much. Love having you guys on here. Have a fantastic week. Don't hesitate to reach out on Twitter or obviously through the Nest. And I look forward to catching you guys on Monday. Take care.